for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's first get a quick check of today's highlights. Despite high hopes on finding common ground to boost crude prices, global oil producers failed to agree on an output cap at the OPEC meeting in Qatar. Rice is piling up in Korea as more people lean towards options like toast over a bowl of rice for breakfast, and this is creating quite a headache for the Korean government. We have these stories and more coming right up. But first, Korea's central bank will be announcing its new growth outlook for this year tomorrow. And the Bank of Korea governor has already hinted that the growth forecast could be lowered to the 2% range. And there are questions on the effect this downgrade might have on the bank's interest rate policy. Our Hwang Jae starts us off.
With sluggish exports prompted by the slowing Chinese economy as well as slumbering domestic demand, it's now almost certain that growth in Korea will be in the 2% range this year. Ahead of this month's monetary policy meeting on Tuesday, when the central bank will also release its new growth outlook, the Bank of Korea Governor Lee hinted at the possibility of a growth rate below 3% this year. The central bank's current growth forecast stands at 3%, and if the BOK actually cuts its earlier projection, it's not going to be alone. Most local institutions as well as other global investment banks expect Korea to fall short of expansion in the 3% range. With that, market expectations for more easing to prop up growth remain, but analysts say a rate cut is unlikely this month.
Economic indicators in February, as well as export figures for March, have improved, prompting the central bank to keep an eye on the current situation before maneuvering the interest rate.
4 of the central bank's monetary policy board members are scheduled to be replaced following the monetary policy meeting this month, another issue that market watchers say will make it hard for the BOK to cut the key rate. They say it's unlikely incumbent members will take any such actions, as it will leave fewer options for their successors. During his trip to Washington for the G20 financial leaders meeting on Friday, the top central banker also said that the BOK is carefully managing its monetary policy, as it could be dangerous to change the key rate with the country currently facing various external uncertainties. Hwang Jae, Business Daily.
Korea's Finance Minister Yoo Il-ho has emphasized the need for consistency in economic policies and vowed to pass a number of key economy-related bills stuck in Parliament before the current 19th National Assembly comes to a close. The announcement came on Monday after the minister returned from a 9-day trip to meet with G20 finance ministers and top central bankers. He said there are growing concerns about a delayed recovery and escalated uncertainties in the global economy. Therefore, there's a consensus on the need for structural reforms and speedy efforts to revitalize the economy under such conditions. Now, you explained global ratings agencies like Moody's and Fitch have cast doubt on whether Seoul will be able to push through with its proposed structural reforms in light of the recent general elections that cost the ruling party its majority in parliament. Singapore and China have emerged as the biggest spenders over the past decade when it comes to supporting their local currencies in the foreign exchange market. According to a report by the International Monetary Fund, 73 countries spent roughly 0.6% of their annual average GDP on currency intervention from 2002 to 2013. Singapore took the top spot, pouring in 2.14% of its GDP over the cited period, followed by China, which allocated 1.84% to currency support. As for Korea, it placed 28th with 0.75%. Key currency holders such as Japan and Britain lingered at the bottom of the list with 0.0% and 0.05% respectively. And to tell us more about last week and this week's stock market action, we have our markets reporter Choi Jin-seok from Arirang News Center joining us on the phone today. Hello, Jin-seok.
Thanks for having me, June.
All right, so let's first get a look at the Korean stock market. How did the market close on Friday? And tell us more about its overall performance last week.
Yeah, the Korean equity market closed with a mixed picture on Friday. The Kospi didn't move much, falling by a point, while the Kosdaq rose by 0.3%. On Thursday, the Kospi closed above 2010 level for the first time in more than 4 months, helped mostly by China's upbeat trade data and massive stock buying by foreign investors. That's why Friday's market activity was quite muted compared to the previous session. Also, China's growth figures released that day indicated the economy grew 6.7% last quarter, meeting market expectations, and therefore not having much of an impact on the market either. On a weekly basis, though, the Kospi surged by 2.1% thanks to better than expected global economic indicators and rising oil prices. But at the same time, experts have been divided on whether the index can rise further, as a short-term spike can add pressure to the market.
Then how did the Korean stock market close on the first day of this week?
Market performance during the first session of the week was quite sluggish. The Kospi fell by 0.28% to close at 2009, while the Kosdaq closed with a slight downtick. Although foreign investors bought more than $170 million worth of stocks, a heavy sell-off by institutional investors and a share price plunge in a few stocks dragged down the Kospi market. For example, Samsung Life Insurance's stock price plummeted by 9% due to profit-taking followed by a recent stock price surge. In order to revitalize the country's stock market sentiment, the Korean government has recently been beefing up its efforts to expand dividend payments, and so far it seems to be working. Korea's listed firms have increased their final dividend payments over the past 3 years to enhance their share value. According to the Korea Exchange on Monday, 492 of 737 listed firms will pay a combined $16.6 billion in final dividends to shareholders by the end of April. Payouts by companies listed on the benchmark Kospi soared 62% in the 2013 to 2015 period as well.
And let's now turn to the U.S. How did the earnings season play out last week, and which companies are expected to draw attention this week?
Last week, most large U.S. banks reported an earnings decline on an annual basis, but better results compared to market expectations. That's why the U.S. stock market reacted positively, with the S&P 500 index surging by 1.6% on a weekly basis. Global tech giants will unveil their quarterly results this week. IBM and Netflix will report on Monday, Intel and Yahoo on Tuesday, Qualcomm on Wednesday, Alphabet, the parent company of Google, as well as Microsoft, will report their earnings on Thursday local time. Amid a strong dollar and sluggish global demand, IT companies are expected to record weak results just like other industrial sectors. However, investors expect companies can beat already lowered expectations, creating positive market reaction once again. Better performance from global IT companies can also have an impact on Korean IT component companies' stock market performance as well. This has been Choi Jin-seok for Business Daily.
The world's biggest oil exporting countries have failed to agree on freezing oil production. Saudi Arabia wants a cap to boost prices, but Iran, which pulled out of the meeting last minute, won't agree. And our Kim Min-ji tells us that the group's failure to strike a deal in Qatar is sending oil prices nosediving again.
No agreement. Officials from 18 oil-exporting nations comprised of both OPEC and non-OPEC members met in Qatar in the hope of inking a deal that would put a ceiling on oil production at January levels. Casting a cloud over the outcome, Iran refused to join the talks at the last minute. Tehran maintains that it would boost production to levels seen post-sanctions. Adding to woes, Saudi Arabia, the world's largest oil exporter, was only willing to freeze output if all major producers agreed to do so, including Iran. Qatar's oil minister said the group needed more time before an agreement could be reached.
The meeting concluded that we all need time for further consultation from now till June meeting in OPEC all participating countries will consult among themselves.
On the news, West Texas Intermediate shed more than 6%, falling below $40 a barrel at one point in trading. Global oil prices have plunged over 70% since mid-2014, driven by near-record production from OPEC and other producers. But many analysts are on the same page that the move to freeze, not cut production will have little impact.
It doesn't mean much because the people involved are talking about freezing their production level at an already high rates into a market that is still oversupplied.
Experts say the failure to reach a deal could prevent prices rising anytime soon, with the chance of market balancing out also receding. Kim Min-ji, Business Daily.
Last week, we told you an IEA report put Korea at the top of the list of OECD countries when it comes to growth in greenhouse gas emissions. Now, a domestic report shows just how far the country's coal dependence has come. Data from Korea Power Exchange shows coal accounted for 40.6% of last year's energy output of 495,000 gigawatt hours. The country spent 35% of the total $36.2 billion spent on energy generation on coal-fired power, which represents a near threefold rise over the past 10 years. On the other hand, less than 5% of the total expenditure went to renewable energy, down 10.6% from a year earlier. Do you start your day off with a slice of toast and end it with a bowl of noodles? Well, it seems a lot of people are, as these changing tastes are leading to a plunge in rice intake and a surge in government costs to manage the rice surplus. Our Lee Joo-young has the story.
Korea is losing its appetite for rice, with wheat-based products like pastries and other breads slowly emerging as a new staple. According to Statistics Korea, the country's per capita rice intake hit a record low of 62.9 kilograms last year, falling to less than half the amount consumed 30 years ago. Flour consumption, on the other hand, reached a new high of 34 kilograms per person. The statistics agency says at this pace, rice consumption will continually decline to reach 49 kilograms in 10 years' time. With people eating less than 2 bowls of rice a day, the already overflowing inventory continues to swell. Korea Rural Economic Institute says Seoul's rice stockpile amounted to over 1.3 million tons as of last year, almost double the UN Food and Agriculture Organization's recommended inventory of 720,000 tons. This is creating huge headaches for the government, as the surplus is costing the country roughly $370 million annually just in management. At this, the government has been actively pushing for various measures to push up its rice reserves by donating to countries in need and expanding exports of rice-based products. The Food Ministry has also started incorporating old rice into animal feed since February to save on corn imports. This is expected to cut the government's stockpile management expenses by about $1 million for every 10,000 kilograms. But critics say these measures will not be enough unless the underlying problem of having a population with a dwindling appetite for rice is resolved. Lee Joo-young, Business Daily.
Social commerce giants continue to expand their footprint across Korea. And though they're now posting sales in the hundreds of millions of dollars, they're still coming up short when it comes to turning a profit. Our Eunice Kim reports.
Korea's fastest growing e-commerce company is on fire. Despite consumer spending in the doldrums, Coupang last year raked up sales of more than 1.13 trillion won. That's just shy of $1 billion, more than tripling what it was in 2014. But that was not enough to offset its costs, leading to an operating loss of $475 million, 4.5 times more than what it was a year earlier. And it's not alone. Number 2, WeMakePrice saw on-year operating losses swell by nearly fivefold, while Ticketmonster actually did, both raking in losses amounting to $123 million for a grand total of $721 million among the top 3 social commerce sites. While their main source of income comes from commission fees on products sold by offering everything from spring outfits to spring water and travel packages to Europe, Their strategy is to grab as much of the domestic market as possible, relying on investment from outsiders to fund their run to the top.
We still have quite a bit of investment left over. Our debt ratio is 152%, while our liquidity is at 156%, so our financial standing is quite favorable.
Coupang says nearly 89% of its operating loss came from building its own logistics system, complete with its own in-house fleet of same-day couriers, and was thus planned. As the company has its eyes set on expanding this system, market watchers are concerned with the snowballing losses, as well as the extended online price war instigated by big boxes like E-Mart and Lotte Mart. Others are more optimistic, saying that these e-commerce sites were able to withstand the attack and still raise their sales is impressive, adding if they can offer customers something more outside of price competitiveness in the next 2 to 3 years, that could be their ticket to long-term sustainable growth. Eunice Kim, Business Daily.
And that wraps it up for today. But we'll be back tomorrow with more at the same time, same place for your Business Daily. Thanks for watching and see you soon.